Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 23rd, 4:50 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Happy Thanksgiving to everybody out there. I plan on relaxing tomorrow, watching some football, looking at some charts, watching some videos that I hadn't gotten to in a while, and going to kick the feet up and have a great time with the family. Hope you do the same. So state of the market, bear market rally continues. You can see over here on the trend gauge, leaders showing as bullish, and all five of the major indexes also showing bullish across our short-term 21-day exponential moving average and medium-term 50-day moving average. Long-term 200-day moving average continues to be a fly in the ointment, particularly for the S&P 500 and the NASDAQ 100. As far as what happened today, follow-up gains to yesterday's nice green numbers as the S&P and the NASDAQ 100 were able to get across some key levels, key fib levels that have been acting as resistance, and growth outperformed value today, even though that means in a lot of cases junk led some of the way. But we're a growth shop. We want growth to lead. If that means growth coming off the bottom starts to repair some charts, we're okay with that. We'll wait for them to get back above the 200-day moving average and see if they have some staying power. G6, this is our 6 ETF composite that we use to track growth stocks, up 0.62% on the day, led by ARK-K, up 2.9%. That was led by Tesla, which was up 7.8%. Tesla got a couple of upgrades today, and maybe short covering, maybe not. Maybe that's just as low as it's going, and if Musk doesn't have any more stock to sell to prop up Twitter, maybe it'll put in a bottom that'll support the NASDAQ 100 and certainly be good for tech and good for the indexes with its heavy weight at the top of the indexes. S&P 500 up 0.6%, NASDAQ 100 led up 1%, Dow Jones Industrial Average up 0.3, mid-caps up 0.1, Russell 2000 up 0.2, Global Diversified 60/40 stock and bond up 0.69%. In-house, our flagship GROTECTION portfolio up approximately 0.42%. We'll go through the tail of the tape and charts of interest. But first, let's do our public service announcement for what we do here at Revere. We are a rules-based investment advisor, fully transparent, fee-based only. That means we don't push any products, conflict-free. We're a fiduciary, which means we act in the best interest of our clients, don't accept any outside payments from anybody to push their products. We're registered with the SEC. Our flagship portfolio is called GROTECTION, which aims to grow assets during market uptrends and protect assets during market downtrends. We manage individual client accounts. We're not a hedge fund. We're not a mutual fund. Every individual client gets their own account, their own a website to log into to check their balance. They see the trades as they're posted, can check their balance at any time. Everything is fully liquid. We manage the accounts across 3 time frames and based on the action of leading stocks, as we showed on the trend gauge on the prior page. In an ideal time, such as last October, November, when the market is trending above all 3 moving averages and they're configured correctly, we are as fully committed to the market as we possibly could be. We start going sideways or trending lower, our stops will take us out of the market. If we really start to roll over, the slopes of the lines of the short-term moving average will roll over and will raise further cash. If we break below this black line, that's the 200-day moving average. That's when we get to a maximum defensive posture because we want to avoid the bear. Nobody wants to get clawed by the bear, particularly if you're approaching retirement. This is a record of the last 13 bear markets, high to low during the time frame. The worst of them average 44.5%. If you're approaching retirement, nobody wants to give back half of their nest egg. That's why we make downside protection, risk management our #1 job here at Revere. You control the drawdowns, and the returns will take care of themselves during a healthy market because you'll be compounding from a much higher capital base. And if you are interested in this approach, email me, don@revereasset.com, or my partner Dan Stewart, Dan at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. And please share our videos with any friends or family you think might benefit from them, particularly if you've heard somebody at the Thanksgiving table complaining about their IRA or their investment account or their nest egg or their 401k taking a beating. You do not have to be at the mercy of the market. It's never too late to sell. If you've got a plan to get back in, we've got rules for exiting, we've got rules for entering. Anybody that's been with us for the long term can confirm that the rules work. They work in up markets. We pull back in sideways trending markets, and we get the heck out of the way in down trends. And as I said, shout out to us, reach out to us if you're interested. So here's the S&P 500. You can see we bounced off this 8 EMA. Late last week, early this week, follow through strength the last couple of days. Let's go to the 60-minute chart. Let's point out the key area here, this 4007 area. This is, well, let's go to the chart here, the daily. So this third leg down here from 43.25 to 34.91, this whole level here, we calculate, anytime you have a big move like this, we calculate Fibonacci levels, which are retracement levels, dictating how much of the move are we taking back. And typically you look at a 38.2% retracement, a 50% retracement, and a 61.8 retracement. 68.1 is important because normally that means you're taking back the majority of the move if you get over that key level. And that key level in this case was 4007. We tried to get above it on this after the CPI gap up back a couple weeks ago, and we failed there. Went back down, held at 3,900, start to come back up again, and now finally failed at it yesterday, right at it, 2 points shy of it on Tuesday. Now today, this morning, we got above it, came back through it to the downside, got back above it. So this is the good part about that. It's not, we didn't go clean through it. We tested it twice and it held. So here's what I'm talking about. Here's the move up. The market tried to sell off here, got down below the 4007 level right before lunchtime today, and we bounced back above it. Then we tried again. This is an H pattern. These can be ominous patterns. So maybe somebody knew that there was bad news coming at 2 o'clock with the FOMC minutes reporting. We don't know why. We don't really care. But we got back above it and then failed again down to 39.99. But then started coming back, got back above 4007, and then the FOMC minutes came out. Will show in the tail of the tape the majority of the Fed members were in favor of starting to decrease the rate and the pace of hikes, and the market liked that, took off to the upside, and then just consolidated going into the close, holding the gains, holding above 4007. So now that becomes the key level. What we want to see is that resistance, what was resistance, meaning we couldn't get above it. Now we did get above it. We tested it twice intraday. Arguably, we tested it a third time here. The big quick sellout at 2 o'clock got down to 4008 and bounced again. So 3 tests and it holds. We get back above it. Makes it even more important now that we hold it going forward. But right above us, the 40-week moving average and the 200-day moving average, less than 1% away now. We'll see what happens Friday when the market comes. Last time we peaked less than 0.5%. Below the declining 200-day moving average at this 43.25 area. That was back 2.5 months ago. Let's see what happens when the market opens back up on Friday. Obviously, August is considered one of the worst months for the market. We're now in a seasonally strong period, particularly in a seasonally strong week, Thanksgiving week, before as part of the seasonally strong period, which goes into the end of the year. We don't trade just strictly based on the fact that it's seasonality, but we're aware of it, and when we see the strength, we acknowledge it, and it gives us just that little bit much more confidence to get back in and not hesitate to buy things as long as they continue to hold up. Great. If not, we've got to stop for everything. As always, here's the NASDAQ 100. Relative strength today, still not above its highs from last week on 11/15 when we had that shakeout. Rest of the S&P obviously did get above it. We'll take a look at the rest of the indexes momentarily, but got above it, closed above it. NASDAQ has been the laggard. We've been all over this, and it is still 6% below the declining 200-day moving average. Did break out of a little bit of a bull flag here. If you want to look at a 15-minute chart, let's go to like a 60-minute chart. You can see if I would draw lines here, this area here. So after the move up, that's another bull flag that we broke the downtrend line yesterday, followed through to the upside today. So that's positive, and we got above that 280-682 level, which is a big retracement of the entire COVID move. So that's going back quite a bit, but it is a key level, 280-682, and we played badminton around it back here in May, back here in July, again here in September. We tried to get back above it here in October. Let's see if we can get above it and stay above it now as we try to test the downtrending 200-day moving average. Dow Jones Industrial Average, not as strong today, but still new closing highs, up 0.33%. This just looks great, riding the 8 EMA higher. How about mid caps, the second index that's above its 200-day moving average, another higher close, really not much strength there today, and has not surpassed last 11:15 last week's highs. Let's see, the Dow did, obviously. Just want to confirm, don't want to give out any bad info. Yes, obviously it did. It did yesterday, in fact. And now small caps, not even close to getting back above their 11:15 highs. Can't get above the 200-day moving average. We are watching this. These have been lagging for the last 2.5 weeks. You can see the downtrending relative strength line there for small caps. So those are the 5 major indexes. Let's take a look now. How about equal weight? How did the equal weight S&P do? Up 0.42, new highs, above its 200-day moving average. I want to see the regular SPY S&P 500 obviously get back above it. How about QQEW? This is the equal weighted NASDAQ 100 coming into its 200-day moving average, a lot closer than the market cap weighted version of QQQ. How about the dollar today? Weak out of the box, got weaker when the Fed minutes came out, testing the lows of this entire range now. Weak dollar, good for stocks. You can see the stochastic pointing lower again, but we're very oversold. But oversold can stay oversold. You know, it won't stay forever. So we're always on guard, but that's what stops are for, to lock in those profits as stocks go higher and we go through various cycles in the market. How about the VIX? Dropped even further today. This is almost a 20% move down over the last 5 sessions, getting into this 20 area here. Again, oversold. Could bounce at any time. We're not going to predict the bounce. We'll wait for the bounce. GLD, nice move back above the 8 today. Lower volume lately after higher volume a week and a half, 2 weeks ago, up to 3 weeks ago. And then it pulled back, now trying to show some strength again. And GDX, we'll look at that chart momentarily when we go through our holdings. That had follow-up strength today after buying that yesterday. How about Bitcoin? Let's go to the 60-minute, up 4% today. Really just forming a flat consolidation here, trying to shake off the FTX crypto overhang. Let's go to bonds now, TLT. TLT bouncing, making higher highs. That means interest rates are making lower lows. And we saw that. Let's go to TNX here. This is the 10-year. And we certainly saw that. Here's a 60-minute chart. Let's go to a 5-minute chart. It's very obvious how interest rates dropped after that FOMC minutes came out, and that confirmed that they're wanting to slow the hike. So that's positive for stocks as the yields go lower, and we can't pick on TLT and BND tickers anymore as they're trending higher as rates are going down. Let's look at 0TYX. This is the yield on the 30-year, lower lows, new lows going back 4 or 5 weeks now. How about junk bonds? Not showing any fear, making a higher high. and the broad bond ETF BND making a higher high also. Slopes of the 21 coming up through the 50, and the 50 is flattening out. And can't fault anybody for buying the bond ETFs now since they're back in an uptrend. Let's go to the tail of the tape now, and then we'll go through individual tickers. So headwinds continue. Obviously, the dollar coming back and interest rates easing. When I say the dollar coming back, weakening, and interest rates lowering also. So those headwinds, not quite the headwinds that they've been all year. Positive stochastics on the technicals, NASI and RSI, dollar under the 21. Bond yields under the 21 and coming down, call it 1.07. VIX dropped 3.8% to 2049, operating under the bull case. Bear case is if we would break back below the 21, not showing any signs of that, but some pre-weakness signs of that would be a break back below that 4007 fib that we got above today. We definitely want that to hold Friday and into next week as we challenge the overhead 200-day moving average. News was the FOMC minutes, majority supporting slowing pace of hikes, and the market is pricing in a 50% move in the December meeting, and then the first two meetings of next year, 50 and then 25, and then a pause. That's what the markets are pricing in. We'll see what actually ends up happening. Day count up to the last 3 to 3 out of the last 4. Again, bullish week on seasonality. We've been talking about that. Our expectations are positive as long as we stay above 39.50 now. When we saw that with continued strength today, we got above this 4007 fib on the S&P. Whoa, what just happened here? Did not want to do that. Okay, and we got above this support resistance fib 286.82. That's that 50% fib of the whole COVID move on the NASDAQ 100. So good news getting back above there. You can see the action after the Fed minutes. We're at 40.14 at 2 o'clock. After the Fed minutes, the dollar dropped, interest rates dropped, S&P took off to highs of the day. Bonds, as I said, up today, 10 out of 11 sectors up today. The only thing weak was XLE and energy. Chucky, CKY, those are the tech sectors. They led, SOX led, software led. Gold, silver, and gold and silver stocks started out weak, turned around, ended up positive on the day as the dollar was weak. Oils and big cap biotech taking a break. We'll take a look at these focus stocks and a full portfolio review momentarily. In the portfolio today, we just decided to take a little bit off before the FOMC minutes came out. I was looking at things that were 2 ATR extended from their 21. First Solar fit the bill. I booked half of the gain on that, double-digit gain, and it did like 4 times what the S&P did during the holding period. So we're happy with it, with that performance. We locked it in. Plus, we want to, I want to move some of that into SHLS if that continues to act well as its newer merchandise. Bottom line, follow-up gains today through resistance at 4007, and that's with 2, actually 3 undercut and reversals at 4007. So it was back tested 3 times and held. So here you can see the key levels above that level, that 4007 level, setting our eyes now on the 4060, 4042. We came within 10 points of this. That's the weekly, the 40 week on a weekly chart, that 4042 level. So that's the next period to for the indices to attack when the markets open back up on Friday. So let's look at some individual charts now. SHLS didn't add anything to this day as there was absolutely no volume at all. It acted fine, consolidating for 4 days right between this 30 and 32 area, 29 and 32. Want to see that tighten up, and of course volume was lower. Really doing my darndest not to be adding on strength, because post-trade review all throughout this year has showed adding on strength has not been the play. Adding to the strongest stocks on weakness, pulling back to a key moving average or key support level has been the play, and then taking some profits as you get extended from those moving averages. That's been the profitable play all year, not buying on strength, and that's very typical in a bear market. Celsius, what a move on this today after the massive shakeout yesterday. Close back above the moving averages, and who had Celsius being up 11.5% on their bingo card today? I surely didn't. The volume was there, 60% above normal. This just trades. This is just absolutely bipolar action here. Big gap up on earnings, sells off, comes down, breaks below the 50-day, back up on lighter volume. You could argue it's wedging. Yeah, it's wedging. Look at this sell-off. Terrible. Sell it. Sell it all. Some people did get shaken out yesterday. We were fortunate enough to only have a 1.5% size. Didn't trigger our stop. Held it toward the end of the day. It recovered back above the moving averages. Didn't add to it today. Not with the FOMC minutes in front of us, and we're just happily book this big percent, even though it's a small percentage of the portfolio. You take what you can get. AEHR continues to exhibit leadership. It did try to move out today, pulled back, closed mid-range. I'm not going to chase it. ON Semiconductor, again, these are two silicon carbide stocks. The time to buy these was off the 21 last week. When there was some panic selling in the market, we didn't. And it reversed at the top of this range today. I want to see this settle down a little bit. It's all over the place. Lots of eyes on it. Deere, great job today on its earnings report. Big volume. 249% volume, was as high as 448 before easing back to 437. So I handle this the way I normally do now. I'm going to set alerts near the top and the low of today's range, and wait for the shorter term moving averages to catch up to it for a possible entry. Along with Caterpillar, these industrial type names, some of these big ones have shown stellar sales and earnings growth and relative strength as well. I mean, look at the relative strength line on that off the bottom. That's great. I mean, sometimes you see a pattern like this, and it's just a flat line on the relative strength line, which means it's doing the same that the S&P did. But you can see here that this relative strength line clearly shows outperformance on Deere versus the S&P 500. And that was culminated with this gap out of a cup and handle base today on its earnings report. And I will set some approximate alerts here on this relative to the high and low so that I know what the follow-up strength or weakness on this is. That's part of what I do. I always set a kind of a bracket alerts above and below. If it pulls back, I want to know what it's doing relative to the recent range, both on the upside and on the downside. So that's Deere. Another one that gapped up today, BMRN. This got FDA, good FDA news. Gapped out of this double bottom base, big volume, 254%. Same thing here now. I'm going to set some alerts on this. Not the very top. We'll go with 99.50, and on the downside, 95-ish as our follow-up. And then finally, Apple. What's Apple doing? Well, Apple, there's been some chaos going on with Apple over in China. Like a bunch of they tried to lock down the village where they make the phones, and people were trying to escape, and they had to bring in a bunch of military. And man, I just can't imagine living under a totalitarian situation like that, where the citizens can't be armed to defend themselves against tyranny. But Apple holding nice consolidation, holding the 21 and the 50. We very clearly want to see this get above the 200-day moving average to help out the indexes and the overall market. So let's do a portfolio review now, and then we'll wrap this up and start our Thanksgiving holiday. So Steel Dynamics, this I actually considered selling some of this yesterday as it was over 2 ATR extended from its 21-day moving average. It pulled back today on lighter volume. It looks good. Impinge made a higher high. Love that. Volume the last couple of days, despite the fact that this is a holiday shortened week. Semiconductors have been acting well, and now it's starting to move out after 3-4 weeks tight since its earnings gap up. Good stuff. For solar, we took half of this off today, again, because we added a position to SHLS, and its 2 ATR extended from its 21. Mobileye, all over the place. Just when you think it sucks, it moves up. When you think it's great, it breaks down. I mean, it's got a 10% ATR. What can you say about it? But we've got a 3% position in it. Two of the buys positive, one of the buys slightly negative. GFS continues to act well, consolidating up here after these 4 nice volume days after its earnings report. Celsius, we already covered that. Nice move there today. ERX, Energy Week today on lockdown news, I believe. Additional lockdowns out of China. Gap down, but again, energy continues to, every time it has, look at these last 5 days, every time it sells off, it ends up closing near the top or the upper third of its range for the day. And until that changes, we're going to stick with this position. GDX is the other sector ETF that we own. Second straight up day, nice volume as all gold stocks are moving. And SHLS, this is the other solar stock that we added, held 30 today, and that's it. So that's going to wrap it. As always, love to hear from you. Emails don@revereasset.com. Remember, it's not how much you make in the market, it's how much you keep. That's why, as I said, we make risk management our #1 job here at Revere. So wrapping up the Wednesday before Thanksgiving, and please enjoy your day tomorrow. Relax, spend time with family. Try not to fight at the dinner table over politics or religion or sports. Just going to be low key for the Vandenbords here, so I know there won't be any of that going on. Thanks for listening, everybody. Just the facts here at Revere. We appreciate everybody listening. Reach out with any comments, questions, or complaints. Thanks very much, and have a great day.